Hello and welcome. I'm Nicole Kittredge, and today I'm going to be running through a VA loan presentation. I'm going to keep it very basic because I do realize that some veterans are already homeowners, some may be investment property owners, and some of you may be starting out brand new. A little bit of information about me. I'm Nicole Kittredge. I've been helping clients with the lending process for the past 21 years. And I've had my own home for the past 20 and an investment property for the past 5. As a civilian, I definitely want to take the opportunity to say thank you. And if you are in the situation that you already own, this presentation may be a little boring for you, but I am going to keep it short and sweet. Now, on my YouTube channel, I have recorded a home buyer boot camp for the very new folks. You will all laugh at it since you've gone through the real deal boot camp. But it is a great kind of very beginning part of the process. So I thought I would start with an analogy. You may have seen the memes that say if potato can become vodka, you can become a homeowner. If it can snow in Florida, you can become a homeowner. Well, I have my own personal one. Someone very close to me went enlisted at age 37 and survived the forge. And she did that with almost everyone in boot camp half her age. So if she can do that, you can do anything. Let's dive right in. So a little bit about the VA lending option. It started back in 1944, and since then they've helped, I believe, 25 million, not veterans, but 25 million mortgage loans. So with that could be veterans and spouses, but that's a lot of mortgages they've issued. So definitely a success. Back in 1992, they added the opportunity for National Guard and reservists to secure a VA mortgage loan. I am going to move quickly through the slides because you can certainly look here at what's on them, but this is who is eligible. And one common question we get is service requirements. So these are the service requirements listed here, and I will talk a little bit about how you find out if you are eligible in a future slide. Please note that no dishonorable discharges are allowed with a VA mortgage loan. So some of the benefits, you may have heard that VA is a zero down loan, and that is 100% true and a huge benefit to a VA mortgage. Now you still do need deposits, money for closing costs, hiring the home inspector, and so forth, and I'll talk about that in a little more detail. But one big benefit to a VA loan is no money down, and the next is no PMI. So with a conventional mortgage loan, which is probably the most popular type of loan out there, if you don't have 20% down, you have to pay PMI, which is an extra addition to your monthly repayment. VA does not have that. They have lower interest rates. So I always say to my clients, if you're curious how it compares, get a side-by-side. So if you're qualifying for both conventional VA and also FHA, it will typically jump right off the page based on the interest rates, the PMI, which loan option is going to be better for you. And reduced or exempt funding fees. Now, if the VA considers you more than 10% disabled, your funding fee, which is a fee paid to the VA when you secure a VA mortgage loan, may be exempt or reduced. If not, it can be rolled into the mortgage, which is one benefit of not having to bring it to closing out of pocket. I wish it didn't exist, but they do need to fund the VA lending. Closing costs may be paid by the seller or the lender. So of course, nothing is free, but if you want to request a lender paid closing cost loan, you're essentially paying a higher interest rate. That does impact your repayment over the life of the loan. If you want to have a seller paid closing cost situation, it's a negotiation. So I like to put you in the shoes of a seller. If you are a home seller and you have multiple offers on your house, one is cash, we all know cash is king. One is a conventional loan at 20% down. One is a VA at 0% down with a request for a seller credit. That may make your loan not as competitive to the home seller. They may not pick you, but we are seeing a shift in the market. And we are seeing some properties sitting, some with price reductions. You may have an opportunity to negotiate a zero down with a seller credit towards your closing costs, and that's always a big win. The way it works is you're basically rolling them into the sale price. VA loans do have no prepayment penalty. They often will allow exceptions. So if we bump up against something that is against the VA loan guidelines, I will have you call the regional office, which I have on my cell phone, and ask for an exception. Not guaranteed it will go through, but they are very much willing to help veterans, which is nice. So a good flexible loan type. And you can reuse your VA eligibility every time. If you don't pay off your current VA mortgage loan, you won't get full entitlement on the next property. Some guidelines. So I mentioned figuring out whether you are eligible for a VA loan. You can get a copy of your COE, Certificate of Eligibility. If you want to send my team your DD 214, we can request it for you. You can go on the website and request it, or you can good old snail mail and get a copy. It will also tell whether you are exempt or qualifying for reduced funding fee. The property must meet appraisal standards. So FHA, VA, and USDA are all government loan programs, and the government is very particular about property condition. The three major items we're looking for are the safety, structure, and health. Some of the major things we bump up against are peeling paint. So this really is a stickler. If there's peeling paint on a shed out back or a fence out front, the VA loans, FHA, USDA appraisals are not going to be friendly towards that. And it's never fun to do work on a property that you don't own yet, but I have had clients with all of those loan types be willing to strap on overalls, scrape and paint, whether it's the windowsills, just to be able to close in the house. But if you notice, a handrail with no steps, crumbling steps, holes in the walls, that is not going to fly for a government appraisal. Some positives, lower FICO score. And I did add in here a CAVERS check. Many people don't know that's actually done. It's done on all government loans, and it's basically how you've repaid government loans in the past. So if you had a VA mortgage before and it went to foreclosure, they are going to very much look at that. Again, sometimes exceptions are granted. If you had a medical issue that got you to that point, it's definitely worth fighting. But something I think that we don't know about unless we're told. So if you've never heard the word CAVERS, you are not alone. If you have less than perfect credit history, the VA mortgage is also very flexible here. They love to see that you've made an effort to get things on time. So if you've had in the past issues and then you're able to get things kind of buttoned up, the VA is very flexible where other loan types may not be. They have a flexible debt to income ratio. So sometimes I feel like I speak a little fast because I know these terms like CAVERS and debt to income ratio. So I'll slow it down, and you are always welcome to reach out to me with questions. But the DTI, which is a debt to income ratio for short, is a lender's version of your budget, essentially. We are looking at your gross income and your total debt, including the new house, and putting that together in a ratio. VA loans are a little bit ridiculous in that they'll go really high in some cases. If they like your file, we've seen 70%, 80% approved, which is really absurd. You do not want to be paying 70% of your income to your housing. However, if you know you can afford it, that's pretty neat that they're willing to be so flexible. And it really helps me as a lender to be able to talk to sellers and listing agents and tell them, listen, VA lending is awesome. They are so flexible. They allow less than perfect credit, higher debt to income ratio. You should really take this particular buyer's offer. It is more likely to close than other loan types, and that is statistically proven. Earnest money deposit in the Northeast especially. So I mentioned that it's a zero down loan, which is a huge benefit, but you have to put skin in the game, so to speak. So the standard in Mass is putting around $1,000 or more with your initial offer. So you work with the realtor. They have you on MLS listings, which is emailing you the properties that are available. You see something you like that's within your parameters, and you go see the property and decide you want to place an offer. What happens next with money? Typically $1,000 with your offer, and if your offer is accepted, the next step is having a home inspection, which a VA loan does also require a pest inspection. And if that goes well and you want to move forward and buy the house, you're going to sign the purchase and sale. In Massachusetts, the standard is 5% down. That's a lot of money. So back to the seller's shoes, if you're looking at multiple offers and one offer has the standard 5% and the other one has, 500 with the offer and 500 with purchase and sale, they may not consider you as competitive. even in the best buyer's market, the lowest I've seen clients be able to buy a house with is a couple thousand out of pocket. So we are now very much in a seller's market. So the more you can have, the better. And you may be saying to yourselves, Nicole, you said it was 0 down. So what happens if I do put a deposit? Super question. What happens is it goes on closing day towards your closing costs, your escrows, and your prepaid items, which if you work with a good lender, that should all be detailed information that you receive to the penny. And if there's a surplus, you actually get a check cut back to you on closing day, which is a nice benefit. So it is a 0 down loan, but you do need those deposits. And your realtor will be able to guide you as far as what they think you can get away with. Again, if it's a house that's been sitting, maybe they've had price reductions, you may have a lot more opportunity to purchase with minimal out of pocket. We also have a note here, primary residences only. VA does not do investor loans or second homes. And the VA residual income is calculated. So this is also like a debt to income ratio. We are having to answer questions to our VA underwriters like, do you have childcare expenses? How many people are in your household? They do want to make sure that you're not getting into a position where you're over your head. So the VA residual income is something that's done behind the scenes, just like the Kavers credit check, to make sure everything is copacetic with your budget. And I think a lot of folks don't realize that that actually happens. I'm going to fly through the next 2 slides. VA offers fixed, adjustable, and jumbo. Now, standard jumbo loans require 10, 20% down in a lot of cases. With the VA, you do need a down payment on jumbos, but it's much less typically than a standard loan program. VA has phenomenal refinancing options. They allow cash out to 100%, which do think twice before you do that, unless you really need to. And they have a fantastic streamline refinance. So let's say you buy now, rates are 6.875. By the end of the year, rates are at 6%. Definitely ask about a streamline refinance. Eligible property types. I would say that the VA's bread and butter is single family homes and VA's on the already approved condo list, but every single property type here listed is doable if they meet VA requirements with a lot of elbow grease and time. And that's something in this market we don't always have. In a seller's market, the sellers often direct the timeline and want to move quickly. I don't want to move forward without talking about multifamily homes. So realtors will tell you, especially in the Northeast, it is so expensive for multifamilies that pass the VA property restriction requirements. So that don't have the peeling paint, that look great. A lot of multis in the lower price points need work. So that doesn't work great for a VA mortgage loan. However, I did train a veteran from scratch in the mortgage industry. He is doing amazing. He actually has left the corporate world and is now fully doing real estate investing. And it was back early in the pandemic. He picked up a 2-family in Worcester. It met the appraisal requirements, and he did great with that property. So it is possible, but you do have to look out for those property condition requirements, and everything's more expensive because you are doing inspections on each unit and so forth. Benefits of working with New American Funding and suggestions for whoever you work with. There's a new trend in the mortgage industry, and I am all for it. It's the soft credit check. So typically when you apply for a mortgage, you have your credit dinged. Ask if they can do a soft credit check. I am a huge fan of this, and it allows you to move forward, get initial estimates. If you need some credit help, you determine that up front before you have a hard inquiry. Free upfront underwritten pre-approvals. That's a little bit of a mouthful. Sorry if you lost my screen there. That is an opportunity that's totally free to you, where you provide all your paperwork and you go through underwriting up front. It shouldn't cost you anything. Avoid lenders that charge application fees. And it takes the stress off you because you know you've gone through underwriting up front and you can just focus on getting a house and being in communication with your mortgage lender for estimates. It also helps us when we talk to those sellers and listing agents say, I have seen Sergeant Burton's paperwork. Everything looks great. I highly recommend you take his offer. He's already through underwriting. Just a little tip, we have a VA in-house renovation team that's currently actually being revamped and improved. And we have a NAF cash program. So remember when I talked about if a seller has multiple offers and they have cash, we all know cash is king. New American Funding saw a need to create a program to help buyers win offers. We only offer it to conventional financing and VA veterans. So that is a whole nother presentation in and of itself, but I wanted to mention it here. If you're ready to move forward, I always recommend a phone call with whoever you're going to work with so that they listen to your goals and your plan and your timeline. Here is my website. If you'd like to reach out to me, all my contact information is there. And this last slide here, that's a picture of my soldier. I was really proud of her a few years ago for getting through boot camp. I was really scared when she was going through it, but she crushed it. So thank you all so much for your time today. Absolutely reach out anytime.